All right, good afternoon, everybody. Gavin McGuire, event trader here, and I am joined by options trader Brandon Mars as we're going to go into the latest edition of the Options Playbook. So, Brandon, how are you doing today?
I'm great, Gavin. How are you?
I can't complain, can't complain. Just interesting market, some chop going on, but definitely a little bit of rotation going on there. I was just talking about the RSP versus the SPY. That's, of course, the equal weighted versus the weighted. And the equal weighted certainly outperforming there. A lot of strength in the financials and IWM performing well for those small caps. So people have heard a lot about what I've had to say about the markets. How about providing a little color on yourself, Brandon? What are you seeing out there?
Yeah, it's interesting that you say that. I actually put in my morning notes today that we could potentially enter into an environment where maybe we start to see the indexes flip flop each day. Just yesterday, obviously, it was made a little bit of sense to have a little bit of pullback in the Dow after a big day on Friday, and then the Nasdaq became the leader again. So, be interesting to see if that happens. It just keeps you on your toes a little bit as an options trader. It creates, I think, pretty good trading because you kind of end up in an environment where it just makes sense to lean towards the call side. So I think doing your research becomes a little bit easier, but sometimes it makes it a little bit trickier to stick with a stock for a week, and makes it a little more difficult sometimes to carry risk overnight. But for me, the charts are looking pretty good. You got to be careful of these choppy consolidation days, but for me, as long as the charts remain the way that they are, I think we'll have a pretty good environment for some calls.
When we start seeing a little bit of rotation like we have the last couple of sessions here, does that change anything in your philosophy in terms of, how far out you might buy a call or anything like that?
No, not for me. I could see for some traders that probably making some sense where, maybe if you're looking at some of the blue chips, and we'll dive into some characteristics of those throughout this conversation. But maybe if you start looking at some more of the blue chips, their options tend to be a little less traded, and some really big names don't have a ton of volume on them. So sometimes you might have to go out to the monthlies if you're trying to play a trend on like a blue chip, just because that might be where you find the volume. And some of those blue chips are probably not always the best day traders per se. So for certain traders, yeah, I'd say that you would probably adjust. For myself, I don't know. I guess I'm just stuck on the weeklies for me, so I don't personally make a ton of changes there.
All right, let's talk a little bit about some of your recent trades here. I know there had been a number of questions about Qualcomm coming in. You got Google out there, Amazon you fired on today. I think that's all the ones you got in the hopper right now. Am I missing any?
Nope, that's it.
So let's just kind of talk about them, run down your thinking on those trades right now. Drummer's choice. What would you like to discuss first?
Well, I got Google in front of me, so let's
Uh,
go with that. Well, actually, I have all of them in front of me, but that one's right in my line of vision. So,
Let me ask you, when you're doing the options, this would probably be a good starter too. Obviously, you got the A and C shares, the GOOG or the GOOGL. Do you find a difference in the options volume for the liquidity for either one of those?
I haven't actually gone and looked at that in quite a while. When I first decided to trade Google, this was a long time ago. I had gone through and I had found that the GOOGL worked better, and I have just stuck with that. Maybe I'll do that this evening. Over a glass of wine, I'll retake a look. But I haven't looked and compared in so long. I've just been with one, and stick with what's working, basically.
So you do go off the GOOGL.
Correct.
Yeah, yeah, that's usually what I do too, actually. So, we'll pull that up now. So, how do you want me to show this? Daily, weekly chart?
Daily would be great.
All right, so daily is up. You want to walk us through the trade?
Yeah. So if you look at Google, it actually had a little bit of an ascending triangle forming here going back to about the 19th of May. So had the nice move up. I believe that move was post earnings, I believe. But yeah, you got the nice move up, you got the kind of the sideways triangle consolidation, and looks like yesterday it finally started to break it, and got another nice, pretty strong day today. So I liked it for that. And then I also liked it, if you just look at, and you don't necessarily need to pull this up, I think we all know at this point, but, if you look at the Apples, the Metas of the world, a lot of those, again, I'm not saying go and bet against them because their charts look strong, but a lot of those we're starting to hit the upper Bollinger Bands. So maybe getting a little extended, a little further away from some of the moving averages than I would have liked. And Google really didn't have that. So again, just trying to find strong names that aren't super extended on the charts. So kind of those combination, Google was probably my favorite setup into this week. And so far, so good. And, in this environment and the way the chart looks, I would think in theory that it would probably test 130 this week unless we get a sell-off in the market.
All right, so there's Google, Qualcomm. I liked this trade when he took it because I feel like this is a name that has been lagging some of the other peers. We're starting to see some of the inventory issues around mobile and PC working its way through, which obviously bodes well for Qualcomm. Stocks bouncing around this 50 area, so this has been on my radar. So I liked your call on this one. Obviously, a little bit of a rough start to it yesterday, but getting that nice bounce back. So why don't you talk a little bit about Qualcomm here?
Yeah, so I had Qualcomm actually on my radar for the reasons that you just mentioned. And then yesterday I happened to just be watching it because it was on my watch list. And I started to see some, in my opinion, some interesting price action. It just kind of looked like the price was being manipulated a little bit for accumulation purposes. And we had the Apple event coming up, which again can be a risk or a benefit to the stock depending on what they have to say. Intel's a great example yesterday. It
Yeah.
did not pan out well for them. But I was seeing this price action, so I was kind of intrigued. I liked the name anyway, and I jumped on it. And I don't know if I want to call it a game, but I'm definitely going to call it a game where they dropped it pretty well after the Apple event. So took a little bit of a ding there. And gee, surprise, surprise, we're up 3% on the day now. So, now this is looking kind of interesting. It's back above its 50-day. As of right now, it's got an engulfing candle, and I think it's got probably a little bit of room to run to maybe the 117. And if it gets through there, probably the 120 area up to the 200-day. So, again, one of the challenges I've talked about with options before is timing, and sometimes you get caught up in these games. So took a little bit of a ding on that particular contract, but I think the stock is looking pretty good.
Are you still in it,
I
Qualcomm?
am.
Okay, yeah, yeah. So, but it's bounced back on you, right?
It has bounced back, and actually this morning I got to go back and look, but at one point you could have definitely taken a decent little profit on the particular contract that I was in, but I am still in it.
You got a target.
I am going to keep an eye on that 117 area, and depending on what the market looks like and what the intraday chart looks like approaching that area, potentially exit or roll because it's the 117 contract. So again, as it would become in the money, I'd probably want to lock in and move my strike up. And if it's looking strong, then maybe try to push to 120 if the market remains strong. But I kind of want to see it at that 117 level.
Yeah, you figure if it could get through 117, then 120 is a given. Anytime you get that close to a 200-day moving average, you usually want to see that push and test just to see if there's any inventory up above. I find so.
Exactly.
So yeah, no, I like this trade, and then Amazon. And
Yeah. So
I should have the
Amazon,
charts up too. If people are still seeing old charts, maybe just reboot the browser. I did just double check, so hopefully that's straightened out at this point.
and actually for Amazon, if you could switch over to maybe a 5-minute chart or intraday of some
Yeah,
sort.
not a problem. Not a problem. Hold on, let's do that. All right.
Yeah. So Amazon, this is just another chart that's been pretty strong. I mean, it's just been, if you I use the 5 and the 10-day moving average. I mean, it's just climbing along those, getting bought up, brushing up against the upper Bollinger Band a bit, but it's kind of got that nice smooth, riding the upper band that I like to see. And I had it on my radar today. And if you look between the open and about 10:30ish, you got the nice move up, and you got a little bit of a kind of sideways consolidation pattern, and kind of just saw it coiling there, and right underneath that 126 area, and figured that if it broke, it probably would make it move at least to the 127 area. So that was just kind of an intraday technical pattern that I saw.
All right, all right. All looking good right now. So let's talk a little bit then about some of the notes that you had sent over to me, Brandon. I mean, basically, as you know, this segment, what Brandon and I are trying to accomplish here is certainly getting his voice out there on audio. He's a pretty savvy trader, and obviously bringing the options aspect to it brings a unique look from what I tend to discuss on audio. So going through his market thoughts and trades is certainly a great way to get a better idea inside what he's trying to accomplish. But we're also looking for a little bit of learning experience going on here. And with that in mind, this week what we're going to kind of talk about is Brandon's going to go through and give a little bit of color on some liquidity in these different names, which names tend to find the most interest, and therefore, giving you a little bit better fills, better stops, start, and covers within your trade, not taking those big gap losses at all or anything along those lines. So he's also going to take a look at and discuss some of the blue chips out there for people who might view themselves a little bit more on the stodgy side of investing, not really looking for the quick hits. But we're going to take a look at different ways that you could buy into these names using options that lower your risk, but still provide you a little bit of a leveraged return potential going down the road, and hopefully use it as another option to just straight up equity trading. So, with that in mind, Brandon, you talk about the highest traded names out there, the Teslas of the world, NVIDIA's, Amazon. So, what are the names that you usually see as the highest liquidity out there for options trading?
Yeah, so really no surprise there. I mean, it's the big tech names like you just mentioned: Tesla's, Nvidia, Amazon, Apple. All of those, unless you're going way out of the money and a year out or whatever, you're going to find just pretty much great liquidity on all of those names. So again, no surprises. Those are usually the fan favorites for a lot of traders. So plenty of liquidity on those, and then you find names, we'll call it maybe the Reddit names, an AMC or a Palantir, some of those names that kind of catch fire with the retail world, if you will. And then usually it's a rotation, what's hot right now. So, no surprise, some of your AI names, in particular, the ticker symbol AI. So, we had that ongoing rotation of, kind of whatever, I don't want to say bubble, but maybe whatever bubble we're seeing out there at the time. So that's kind of the general breakdown of the land of options and liquidity. Yeah, and like you said, and I touched upon it a little bit already, like the Dow stocks. If you take some of those Dow stocks, I haven't checked the market caps on all of them, but I think a lot of them are $100 billion plus market caps, so they're not small. You've got a name like a Honeywell. So I did all this research last Thursday, just as a reference point for the numbers that I provide here. Last week on Thursday, that traded 2,466 options versus Apple, which traded a million. So, again, some of these big names that you see out there, aren't always necessarily the best for trading options per se.
I'm assuming that's because obviously we know options trading has really picked up in popularity over the last 5 to 10 years. and you got to figure a lot of the options traders come into the market. They're a lot more familiar with the Teslas, NVIDIAs, Amazons of the world. So has it kind of always been this setup for the Dow components where they just simply don't see as much option activity despite being obviously big bellwethers for the broader market and economy?
From my time trading, that's the observation that I've had. I mean, I haven't been trading options for 15 years, just for, again, my full disclosure. But since I've been trading, that is really what I've seen. And yeah, again, sometimes you'll start to see spikes around, maybe a company announcement, or, you probably saw some increased activity yesterday on like an Intel because there was some news out there around earnings. You'll obviously find an increased amount, but yeah, for the most part, I mean, obviously you've got your Apples and your Microsofts of the world that are pretty heavily traded on the options front, but there are a lot of names in the Dow that are barely traded sometimes.
I assume that there's a demand issue there too, right? Where probably a lot of these Dow holders are, more of the CalPERS and, major teachers unions, things along those lines that are trading within these names than quick hitter and day traders, basically.
Yeah, I would say so. And I mean, I think watching some of the Dow stocks, they can get a little tricky sometimes to trade. I have found at times for them to be a lot of fun, but some of the surges I think that happen in those have to be pretty well timed because they're just kind of, you know, trading along nice and slow and steady. And then you got to kind of be pretty good on your timing to catch some of the surges. I think if you do, like I've traded McDonald's a couple times, and if you catch that right, I mean, you can quickly make a 50, 100% return on your options, but they're just kind of the slow and steady traders. And yeah, I think with the retail millennials these days, they're just not really looking for that slow and steady. It's more of the what's exciting. And I wanted to share one quick strategy on these Dow stocks. So a friend of a friend, when I was learning options, one of his main strategies was he would find a Dow stock or some sort of, it doesn't necessarily have to be a Dow, but some sort of blue chip type stock, and look for either like a flag pattern or some sort of breakout after earnings and then a brief consolidation. And what he would do is he would then go out 30 to 60 days on his options and kind of let it sit there, the slow and steady. We're going to potentially break out of this consolidation and I'm going to catch the trend. I think that's a great way to potentially play some of these names for people that, either don't have the time or don't want to deal with the stresses of these quick intraday trades. So I think it's a great way for people to potentially dip their toe in the option water that are, kind of sitting there on the sidelines wondering whether they want to learn about them or not.
Um, what's the process for writing these options? Like, how do the houses decide to kind of go about doing that? In terms of, obviously they got to be getting a lot of calls saying, hey, we want to buy the Google calls, whatever it might be. So I mean, is it just simply as simple as that? If they're seeing the demand out there, they'll go ahead and write it, or is there some sort of process that they got in the back room in order to create the liquidity for this? Because obviously, if you got a stock, you got a certain amount of shares that could be traded, and that liquidity will be based around that. But options is a little bit more unique in terms of you need somebody writing those options in order for them to create. So how do they go about that process?
Yeah, from what I've seen, I'd say there's definitely some behind the scenes conversations because sometimes you'll just see like all of a sudden randomly just, 5,000 contracts traded on some random strike 6 months out. My assumption there is some sort of market makers talking to one of the big players like the CalPERS, like you just said, that wants to hedge that position. So I think it's that. And then, one thing that you'll see, especially on some of these, kind of current hot stocks, if you will, is you'll look and all of a sudden, let's say like AI were to spike up to like, I don't know, $60 per share. What you would see overnight is all of a sudden you'd start seeing all these new contracts pop in. So they'd basically be kind of cluttered between on the option chain all of these other strikes that have a bunch of open interest already on them. So you'll see 5,000 contracts open interest, and then a contract that will show 0, and then it keeps going like that. And that's just a demand thing, like you just said. And I think too, I think it's one of those where if Wall Street sees an opportunity where somebody wants to buy an option from the demand, they're going to figure out a way to make money on it, and they're going to fill that demand.
Yeah. If there's a paycheck at the end, they'll be chasing it, right?
Exactly.
So, okay, so we talked a little bit about some of the biggest, most liquid names out there. We talked about the Dow Components. You gave us that nice strategy there. I know for any of the blue chip traders out there, again, we are taping this, so you'll be able to go back. I've got it outlined for what minutes we were discussing this, so you can pop right back to it. But you also highlighted in our notes here, Brandon, some ETFs that find a lot of liquidity in there. So you want to talk a little bit about those?
Yes. So the 4 that I had highlighted in our notes were SPY, QQQ. Probably no surprises there. The IWM, and then the HYG. I've actually never traded that, but I know that you've referenced that before, and that was right up there as far as one of the most liquid names.
Really?
Um,
That surprises me. I mean, obviously it's a high yield corporate debt ETF. That and the junk bond. I've been following them just because obviously gives you a good harbinger of risk. So, but I am surprised that that's one of the most widely traded and liquid ETFs on the options side. Any particular thoughts on why?
Yeah, I was a little surprised by that too, and the main reason that I put it on there was because you referenced it, because I thought it was kind of a good tidbit for our subscribers. I think it's just probably an easy way for the retail world to access that particular asset class, and I think people are drawn to that particular ETF, and the more people that are drawn to a particular security, the more, I think, in theory, the more options that are going to be traded. So that was it. But yeah, I was a little surprised by that one myself.
Well, that and I'll let you go on and talk about the IWM, but I think this speaks perfectly to what you just mentioned in terms of people willing to trade themes, but not necessarily all the components in that theme. So, what was it that you found out about IWM that was so striking?
Yeah, so I haven't really traded any names in the IWM, and I can't remember how long. But I looked up a couple of the top 5 components in there because I was curious what kind of volume we'd see. And 2 out of the 5 top components that I looked at, one was Shockwave Medical, SWAV. That had 162 total options traded last Thursday. And another was Inspire Medical Systems, INSP, and that had 128. So, the IWM might be a very liquid name and easy to trade on both the ETF and the options front, but some of the underlying components might not necessarily be the best traders per se. So, I think that these ETFs, it's an easier way to access them. I've been trading options for a while, and I see 162 traded all day long, and I'm not always going to shy away from that, but you got to be careful, because then you start running into just incredibly low volume on strikes, and you run into potential pretty wide bid ask. So, for me, if I see those, I'm probably going to be looking at something else. So I definitely found it interesting that not a lot of people are trading options on the underlying components per se.
Yeah, that is interesting. So, I mean, is there ever a time, Brandon, where you kind of break down an ETF and you go in for a specific name, or if there's a theme that you're looking at, do you usually always just do the ETF with options trading? And I got to be honest, I don't think I've seen you trading too many ETFs on the site. Am I wrong on that?
No, you're correct. And I used to trade SPY and QQQ a little bit more. And then actually, since I came on board with you guys and we've started talking about it a little bit more, I threw out my first 2 trades on the Qs. But other than that, I don't really look at a ton of ETFs. I think for me with the Qs, I got to a point where the charts looked really good and I just couldn't find the individual names per se that I liked, but I thought we had room to run higher. So I ended up going with the ETFs. But no, you're correct. It's been 2 trades on ETFs since I joined you guys.
Okay, so we'll keep an eye out. But from your perspective, SPY, Qs, IWM, HYG, they're the most liquid ETFs there. What about something like an XLK? Obviously 43% of that is Apple and Microsoft, which would fall in under the names that you mentioned up top. So do you see anything with the XLK or any names that are dominated like consumer discretionary, right? The XLY, that's pretty heavy component of Amazon and Tesla. Do you see differences in those ETFs versus the components?
Yeah, I mean, if you look at XLK right now, 7,864 options traded all day. So that's both on the call and put side. So not a ton of
No.
activity there. So, I think if I had to take a guess, I would say that people are probably gravitating a little bit more towards the individual components because those are just the most highly traded stocks that are out there. So, very little volume there. And then let me take a look at the XLY here real quick. XLY is even less, 5,741 options traded all day today.
All right. Let's see. So just kind of moving it along, you do have a number of stocks that you do like to trade that might not fit the square peg that we've been talking about here. You want to give us a couple of those names just to kind of throw on people's radars?
Yeah, so a couple that I enjoy trading, MasterCard, Adobe, and Costco were a couple that came to mind. And, there's a lot more that are out there. I guess kind of where I wanted to go with this is, MasterCard's actually got some pretty heavy call volume today. I'll have to take a look at that when we get off the call here. Where I kind of wanted to go with that is sometimes you'll see some of these names that might only trade 5, 10,000 contracts a day. And, I don't think you should totally shy away from them. You got to be careful as far as your liquidity and your bid ask and using limits. But some of these under the radar names, I think, can sometimes be some great traders. And in certain cases, you might not see as many games as like an Apple. Look, at the end of the day, Apple's so widely traded that you can have money shifting in and out of that. You've got a lot of different market makers, retail institutions. It can sometimes lead to increased games. So I think some of these off the radar names are great ones. The guy I learned from, he loved trading United Rentals, URI, and Workday. Again, some of these you got to be careful because they are not traded as much, where you need to be careful on your bid ask, your limits, and some of these too, because they don't trade as much, can get a little jumpy on the pricing. So they can jump in chunks of 25 cents, 50 cents at a time, which isn't huge money. But if you have 10 contracts and something jumps on you 50 cents and it happens to, go down on you, let's say, right after you go into it 50 cents, that all of a sudden might be a little bit of a quick sticker shock, if you will. So just something to be mindful of, but don't basically, I don't think that you should totally shy away from some of these names that you like.
Oh, just going through this, Brandon, I got to say this URI actually looks pretty good. Have you looked at it?
Yeah, that has been a
It's
pretty strong chart.
moving above that 5200-day convergence here. It looks pretty good. And people are the one thing that I'm finding here, Brandon, tell me if you're seeing anything different, is obviously a bit of a rotation that we talked about. So a lot of people are worried about the chance that recession coming down. Obviously, there was the Goldman call earlier today that people were taking note, and certainly data hasn't really shown any signs of it. But when I'm hearing that, I'm just looking at this chart. This URI looks pretty good.
Yeah, no, I would agree with you. And I actually haven't looked at URI in a while myself, but I just remembered the friend telling me about it. And this is a kind of a good example. I just pulled up the option chain here. So it's trading at roughly 367. So the 367 and a half has 9 open contracts on the open interest and has only traded 5 calls today. So, that's very, very thin. So in something like this, the 370s, this isn't that much more, but the open interest is 63 contracts and it's traded 46 calls today. So, yeah, again, comparing that to an Apple that's probably traded a million, it's very, very light. But if you're not doing a huge trade, you can find some volume that's there. And case in point, the bid ask on it's a 40-cent spread. So you got to be prepared that when you go into that, you're going to automatically, essentially have that loss between your bid ask, and you got to be careful on your volume. And you sometimes need to adjust your strikes on a stock that doesn't trade that much, because you might have to move up or down a strike just to find the volume, because 367 and a half traded only 5 contracts today. That's very little volume, and that could potentially create a little bit of a headache exiting. You'll be able to get it done, but you might pay a few cents for it.
All right, so keep an eye out on that one. I might fire on that on the equity side myself here. So let's see, just a second. Sorry, Brad. All right, just keeping an eye out on price action here on the markets. We're seeing sorry, I was just getting hit with a couple of alerts here, Brandon. Okay, so we are seeing S&P slipping down towards the afternoon lows, down to 42.75. This, of course, was a key support level yesterday, so we'll be watching that, seeing how that continues to play out. All right, Brandon, let's just kind of looking at some of the other items that we've been talking about offline and that you had sent over. Um, Give us, Coinbase, obviously a pretty hot name today, can be volatile every couple of weeks. Obviously, you get your meme names as well and stuff like that. How do you view the options trading and some of these higher beta names, and how do you kind of approach them differently?
It's funny. I put these notes together last week, and I had coin as an example, and then the news came out. So kind of timely there. So
Very timely.
um, that was pure coincidence too. So something like a coin, in the beta names, and I call maybe the retail names. Coin in particular, you've got a whole smorgasbord of market makers, hedge funds, retail. You've got your crypto enthusiasts. I mean, it is just a smorgasbord of traders. And when you get that, you have a tendency for the market makers and the hedge funds to go out and be able to create more fear and greed. So I think that a stock like Coin has been very fun, but also very challenging to trade at times. And I think you got to be more prepared for your head fakes. I think that Wall Street knows how to trick the retail trader that's not working with an algorithm a little bit easier than, a hedge fund or another market maker. So you just seem to see more head fakes and games on those. Another one that comes to mind is like a Penn Entertainment. So they're a lot of fun when they get going, because when that greed kicks in and people are buying like crazy, I mean, that's what you want for your call options. So they're a lot of fun. I think you just got to take some extra caution with them, and watch your charts a little bit closer.
Sorry, Brandon, had myself on mute there. So just taking a look at some of these names like Shop. Okay, just keeping an eye out. Boeing here getting hit on some news Looks like there's a Dreamline production flaw going on. We'll be adding additional 787 inspections due to a fitting issue. It's according to CNBC. So watching that. Boeing and the ITA, of course, coming in on that headline. So when we're talking, Brandon, about a shop, Roku, Snow, names like that, let's just kind of run through Snow. That's been pretty hot as of late. So how would you kind of approach a name like that?
Yeah, so the main thing I want to warn people about there is, again, I think snow can be a lot of fun to trade, but when you get these high growth names, they can be fairly whippy stocks. Roku in particular, I think, is one, and Shop, maybe a little less snow, but just kind of one thing I want people to be prepared for is these names need to move a little bit more than other names, just because you're going to get that higher premium on them. So you'll run into situations where sometimes your stocks move in a pretty good amount, and the option might not be moving quite as much. So I had like an example here again. I actually think this was from a couple weeks ago, but like Beyond Meat, that will have somewhat of a similar profile to some of these names with the higher premiums. The particular day I took the information, I mean, Beyond Meat was up 2.3%, and it was trading around 11. So the $11 call option that day, you would have made about 22%. So, not a terrible number to make on your options premium, in a day, and making 20% on your money any day is a good thing. But, if you were to look at, another stock like an Apple or an Amazon, and it was up, 2.3% in a day, your return profile is going to be significantly different. So, it's more of just, be prepared for some of the whippiness, and be prepared and just kind of know how the options pricing works on some of these different names. Obviously a return on like a blue chip. Another example I have, Walgreens. I had pulled this on a day that it was up 1.3%, and it was trading around 31 and a half. The 31 and a half call option that day, you would have made about 90% on your money. Nice return. That same day, if you were in Square, that was up 1.5%, trading around 61 and a half. If you had gone into the 61 calls or the 62 calls, you would have made about 27% on your money. So again, none of these they're terrible returns, but sometimes, especially if you're new trading options, you kind of scratch your head at the end of the day where you feel, hey, my stock was up a lot, but my option didn't make, that much money. And that's just, again, behind the option pricing and how these different stocks, move, on an individual basis.
All right. All right, Brandon, a lot of good information here. There is a feedback question I'll throw at you, see if you got any thoughts on this. Somebody's asking any thoughts on NVIDIA, and where would you be looking to get long calls after a consolidation here? So how are you looking at NVIDIA these days, and do you have any plans on doing anything?
Yeah, NVIDIA, I think probably a lot of traders would agree. It's like everybody's waiting for that pullback. Like, are we
To
ever?
buy, right? Yeah.
Yeah. Like, are we ever actually going to get it? I mean, I guess I'll speak generally. Like, when I see a stock move up and make a big move like that, I like to either see some sort of, I don't know, 5 or 6 day, whatever, flag consolidation, and then the break higher. I also do enjoy seeing a stock catch up to its 20-day moving average, either through price or time or a combination of the two. Taking a NVIDIA, I don't know if that thing's ever going to catch its 20-day,
Yeah.
So, that one's tough. I mean, for me, if I'm looking at it today and I'm like, all right, this thing's at 384. I mean, if that came back to 380, maybe the 375 range, I think that a lot of people are going to find that to be pretty tough to ignore, right? I mean, I'm actually surprised that it's even trading below 400. Um, so that name in particular is tough, but that's generally one of my favorite patterns, is to actually see a big gap up and then some sort of sideways flag consolidation period where it just catches its breath, and then some sort of ignition day where you just get that big green candle on high volume. For me, I think with NVIDIA, and obviously minus days like maybe today, or days that like the semis really have a tough day, look at even today. I mean, NVIDIA gets down to 382 and it bounces to 386. That could have been an okay little intraday trade. And as I look here, it's made a higher low off of 384, and it looks like it wants to approach 386. I wouldn't be shocked if this thing's at 388 by the end of the day, or maybe even higher. So I think NVIDIA in particular is almost just like, I don't want to say blanket buy the dips because that's dangerous in options, but I kind of want to say that at the same
Yeah.
time.
Yeah, I mean, if there's any stock that you could probably get away with doing that, I would say this would be the one, right?
Yeah, and I've talked about this. It was a couple weeks ago. I talked about it a few times, of the periods of not overthinking trading. The tech stocks are looking really strong. Some of them are extended. I know I can make the bear case for certain charts and stocks, but if you had kind of just bought calls on a lot of those on the dips over the last couple of weeks, you would have had some timing losses here and there, but you would have done fairly well. And NVIDIA's probably going to be one of those names going forward.
Yeah, yeah, I would agree. All right, Brandon. Anything else you want to get off your chest here while we got you on the mic?
I feel like that's kind of a loaded
Personal
question
or
there.
feel free, throw anything at us, Brandon. We're good with that. But yeah, no. Any other thoughts on what we've discussed here today?
No, I think we've touched upon everything. Again, I'll just kind of reiterate. None of this information was to try to scare you away from a Dow stock or a snow stock. None. That is not what the intention was whatsoever. It's more of just kind of knowing what your pricing looks like, knowing what your volume is, and just knowing your expectations when you go into a particular stock, and especially when you go into the options. So yeah, again, I'm not trying to scare anyone away and say, hey, don't ever trade coin because it's got a smorgasbord. It's just, just know what your risk is, and know what it looks like, and basically be prepared at the end of the day of what your returns or potential losses might look like on that particular trade.
All right. Now, great information for us today, Brandon, as per usual. And it's helpful just understanding the different classes. Not all options are created equal, right? In terms of the vehicles that are being used for them.
Yeah,
So,
exactly.
all right. Well, Brandon, thank you so much for joining us. Obviously, if anybody's got any questions for Brandon, feel free to write in to um, feedback, and we'd be happy to have him answer them for you. Certainly, anything that you'd like to see in this segment moving forward, too, we're always open for suggestions here. We're going to continue to hammer this through. It's gotten pretty good reception out there, so it's just great data, great information. Highly recommend you go look back through some of the different series here, because Brandon does provide some great educational pieces for those that are new to trading options, as well as providing some solid color and trade ideas. So, Brandon, as per usual, thank you very much for coming on and joining us here today, and look forward to talking to you soon.
Thanks, Gavin. Appreciate the time as always.
All right, no worries. All right, I'm going to go shut down audio here. Again, we taped this, so I'll be posting the recap to the site shortly, and we'll be relaunching audio in a couple minutes.